Hello, everyone. Good morning, good afternoon, and good evening to all of you, regardless of which part of the world you are tuning in from. I am very much delighted, grateful, and glad to welcome you to yet another promising session on the Extra Speed Life. Well, my name is Sheriff Daramola, and I'm going to be your host for the next 1 hour as I take you through the financial market through a comprehensive price action based technical analysis. But before we delve into the business for today, I would like to get some feedbacks in the comment section as regards to the quality of the audio and the visuals. So if you can see my screen clearly and you can hear my voice, kindly type in hi in the comment section, as this will give me a feedback that we are good to go this morning. So if you can see my screen and you can hear my voice, let me see some hi in the comment section. So I would like to see some feedback, please. I would like to see some feedbacks. So I'm just trying to load up my comment section right now. And let's see what we have here before we start today's trading session. Okay, so I can see a handful of comments right here. So let's quickly run through it quickly. And then, okay, I see Valeric, I see Risto 1995, Nadezad, okay. Okay, greetings to you too. 3725, good morning to you. Thank you very much. Hey, Carrie, good morning. It's happy Friday. Yes, it is. Good morning to you, Carrie. Femi, good morning to you. Thank you. I'm glad to have you around. Trust you are doing very well out there. And Khan786, thanks for checking in. Okay, thank you, Femi, once again. All right. Okay, Risto 1995 to also. Okay, thank you very much. So I think on this note, we are very much good to go. So once again, I welcome you all to yet another promising session on the Extra Speed Life. Well, today is the last trading day of the week, and we all know what today is has a peculiarity to it as regards to the psychological expectations in the market today. So, for today being the last trading day of the week, there is a likelihood that we are going to be seeing some profit-taking activities go on in the market. Majority of the key players in the market will took advantage of that significant move throughout the course of the week will definitely want to be closing in some of their positions ahead of the weekend, and this is likely going to reflect on the chart as price action moving in the opposite direction of the prior leading price action. So we are going to be taking this while we review the market structure. And in fact, in preparation for today's New York session, I have conducted a comprehensive analysis utilizing simple but powerful setups that will be our compass through the market structure. Of course, we are going to be harnessing the power of trend lines, key levels, and of course chart patterns to gain valuable insight into the historical price movement of all of the financial instruments on our watch list for this week. And we have the US All Spot, US Tech 100, XAU USD, which is the gold spot, and of course the GBP USD. So we are going to be reviewing this in the next 1 hour. And for those who are joining us for the first time, I didn't forget you. You are welcome on board. I'm always grateful and glad to have newcomers in the house. So what we simply do here is to gather as a community in anticipation of the New York trading session. And during this time, we normally review and manage our current positions while we also aim to position ourselves strategically ahead of the day's session. So this happens on a daily basis on the Extra Speed Live, 10 a.m. UTC, 11 a.m. West African time, as we come here to review the market structure. So once again, you are highly welcome. So, in with that being said, here let's dive right into the business for today. And the first thing we normally check on is the economic calendar. As we all know, these fundamental factors often manifest on the chart in technical patterns and price movement. And by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and, of course, technical patterns. And this also help us to for better timing in such a way that we can position ourselves in such a way that we can catch any potential trading opportunity prior, during, and even after the event. So, with this being said, here let's dive right into the economic calendar. And in fact, for um, Tuesday, July 21st, we only have an high impact event coming in from the UK economic docket, and this is the retail sales data. This data is released by the National Statistics, and of course, it measures the total number of receipts of retail stores, and the percentage changes reflect the rate of changes of such sales, and it is widely followed as an indicator of consumer spending, which of course gives us an insight into the economic situation of the United Kingdom. And generally speaking, a high reading is considered to be positive for the pound sterling, while a low reading is considered to be negative. And if you look at the previous data we had here, it was 0.1%, and economics were generally projecting based on what is going on that we will be having a 0.2%. But from from the actual data we got here, you will see that we had a figure which was beyond all expectations, as it came in at a whooping 0.7%, giving us a positive deviation of 1.02, which is a very positive data for the pound sterling. So we are going to be going into the JP USD to see how the market has reacted to this event and how we want to be positioning ourselves ahead of the New York session. So with that being said, here on the economic calendar, let's dive right into the charts and let's look at things from a comprehensive price action based technical analysis. So, as usual, the first instrument on our watch list is going to be the US All Spot. And in fact, in the last 1 week, we have been very, very profitable on this commodity, as we've been buying since the early days of this week, though we had some selling position initially, but as soon as we begin to see some buying momentum, we were lucky enough to be part of that bullish move. Now, before we go into the details of what is really going on in the market right now, I want us to refresh our memories as regards to how the week started for us on the US All Spot, as this will give us an insight into where we are coming from and give us better understanding of where we are likely going to be going for today. Now, looking at the 1 hour time frame from an holistic point of view, this is what we were able to spot at the beginning of the week. So we saw, after connecting the series of higher lows, we had an ascending trend line, which of course has been supporting this bullish momentum since the beginning of this month. And in fact, when we saw this, we were of the opinion that price action is very bullish in this particular market. Then we zoomed into the trading activities of last week, where we saw a key structure here around the $75 zone, which has been serving as a strong demand zone in this particular market. Now, if we look at what happened last week, we saw, after the final breakout of the $75 level, we saw how it became difficult for sellers to break below this level. As you will see, every attempt by the sellers to break through was met with strong resistance from the buyers, negating all their attempts. And in fact, on the last trading day of last week, we saw how price action came back into that zone, and in fact we saw buy pressure around that area to give us a sign that we might likely be seeing a trend continuation to the upside during the early days of this week. But unfortunately for the buyers, that never happened, as we saw new structures that insinuated the idea of selling the US all spot. Now, one of the things we saw at the beginning of the week was this bearish gap we saw here. That was the first signal. Then we saw how price action broke down both the demand zone, the ascending trend line, and of course the support line of that range we identified at the beginning of the week to signal a potential bearish move to the downside. And in fact, we took advantage of a couple of sell positions here when price action broke down and retested the $74.50 level. We had one here. We also had another one here. And in fact, on both occasions, price action moved a minimum of 50 to 60 pips on both occasions. And if you had moved your stop loss accordingly, like we always preach in this community, that whenever price action moves significantly in our favor, we definitely want to be moving all stop losses to secure the position. And if you had done that, you will be taking out at a modest size of profits, or at a worst case scenario, break even. Now, one interesting thing was observed during the Tuesday's live session here that began to make us doubt the potentials of the sellers. And that is what we saw here, that as soon as price action got into the $73.75 level, we begin to see how buyers jumped in to negate all sellers' attempts. We saw what happened here on Tuesday, and during the later part of the month's trading session, we saw how sellers were not even, the momentum was not even strong enough to bring price close to that $73.75 level. And right here on Tuesday, we begin to see another sharp rejection, hereby giving us a sign that we might likely be going bullish, as the only thing we want to be seeing here to sell is for price action to break down the structure. But of course, that never happened, giving us the confidence of joining a bullish momentum. And what we agreed here on Tuesday was to position ourselves above the $74.45 level to capture that uptrend move. And in fact, at that point, we had our first buy position for the week triggered, and since that moment, we have been buying the US all spot. Remember, we also capitalized on this move by adding more positions at the breakout of the levels we identified, such as the $75 area. We also had a key level at the $75.25 level, and of course the $75.50 area, which helped us to maximize the potential of this bullish move before the bearish momentum began. Now, during our live session yesterday, we acknowledged that as soon as this bearish momentum pushed price to the downside, price getting into our key zone for the week, which is situated between the $75.25 level and of course the $75 area, we begin to notice buy pressure coming in from that area. And after taking into consideration the breakout of that zone here during the early days of the week, that is, we saw the breakout of the zone here, we were of the opinion that this might likely follow a technical expectation. That is, when price breaks out of a key structure, there is a likelihood that price will come back, retest the structure to incite another wave of bullish momentum, which is exactly what happened here. Though I had a loss here at one point before price finally gathered that momentum to push price to the upside. And remember, yesterday I told us all that we shall be positioning ourselves anywhere right above the $75.50 level to capture this bullish move to the upside. And if you had done that correctly, you will currently have a minimum of 2 buy positions running in this particular market. And remember, I told us all that we are also going to be adding more positions at the breakout of the $76.05 level, which of course happened. So if you are taking advantage of the second position, you will currently be running with about 100 pips on that first one, while the second one will currently be running with about 45 pips in profit. So well done to everyone who has been part of this profitable journey. Now, our next course of action right now, you all know what we want to be doing now, is to move all our stop losses to secure this current buy position. Of course, you know how we do it in this community. As soon as price action moves significantly well in our favor, we definitely want to be moving stop losses to secure position. And from the look of things right here, you know that we of course want to give enough room for price action to breathe. So what we are going to be doing now is to move all stop losses anywhere below the second entry, between the $76.05 and of course the $75.80 area. Of course, we do want to give enough room for price action to breathe, just in case price action may drop to the downside at any point in time. So now, with our positions well secured right here, what is going to be our plans for today? Are we continuing buying the US all spot, or are we going to be getting ready to sell? Probably market participant will want to be doing some profit taking activities today. Well, for us to have a better idea of what is really going on and what our next line of action will be, I want us to refresh our memory as regards to this ascending trend line we were able to spot during our live session on Tuesday. I think on Wednesday, I guess. Remember, we connected a series of higher lows here, which gave us this beautiful ascending trend line that has been guiding our bullish trading activity since the early days of this week. And for the fact that price action remains above this ascending trend line, we will have no other choice than to continue to look out for buying opportunity. The only thing that will make us want to sell the US all spot today is for price action to breach this ascending trend line, breaking it to the downside. Then at that point, we will then consider selling. Now remember, we are not going to be getting too excited when price breaks down the ascending trend line. Of course, we will need some confirmations that truly buyers have lost the steam. And for us to identify this, we want to be scaling down into the lower time frame, where we want to be seeing signs that buyers are finding it difficult to climb back above the ascending trend line. And of course, this feat will be reflecting on the chart as retest of either the ascending trend line or the $76.05 level to incite a sell-off in this particular market. But I doubt if this is going to be happening, considering the strong bullish momentum we have been witnessing since the beginning of the week. But if it does happen, we of course want to be on standby to catch that move. Now, with this situation here, of course, we're going to hold on to the bullish bias since price still remains above the ascending trend line. And of course, this morning, while I was trying to decipher what our next line of action would be, I was able to spot this consolidation phase, revealing how price action had been confined between the $76.40 level and of course the $76.05 area for the last 9 hours. And this further emphasized the level of indecision at that point, as majority were looking at the potential of taking some profit before the weekend, or probably accumulating more buy positions ahead of the weekend. Now, you know how we do it whenever we have this kind of flat channel. We want to wait patiently for either a breakout of that range to happen for us to buy, or the breakdown of the range to happen for us to consider selling. Now, with a buy stop order above that structure, I already have a buy position trigger, and in fact, if you are taking advantage of that move, well done to you for being on standby to catch that move. Now, for those who had missed out on that opportunity, well, it's okay. Let's wait and see if the market will be giving us another opportunity to be part of this bullish move. And you all know from a technical standpoint that whenever price action breaks out of a key structure, such as the one that was broken a couple of hours ago, there is a likelihood that price action could still come back and retest that structure, which of course is something you want to be looking out for, especially for those who missed out on this opportunity to be part of a trend continuation to the upside. And if this continues like that and price continues to climb and find new highs, then another breakout of the $76.80 level will welcome more buy position to our existing trade. So let's see how price action will play out from this area. So we have a simple setup we are actually using to guide our trading activity for today. So the first one here is the ascending trend line, which we spotted that as long as price remains above this trend line, we shall be looking out for buying opportunity, and we are not going to be considering selling unless the breakdown of this ascending trend line happens, and of course the $76.05 level to join a bearish move to the downside. Then in addition to that one is the hold on a second, is the $76.40 area, which will be guiding our bullish momentum for today. That breakout retest of that structure is a splendid opportunity for us to be part of the bullish move. And of course, we have another level at the $76.80 area where we shall be looking out for more opportunity to maximize the potential of this bullish move. So this is how we are going to be managing our existing trade, and of course anticipating new opportunities to buy the GBP, or to buy or sell the GBP USD from this current market structure. So you definitely want to be marking out these levels, as you will be needing them as a reference point to guide your trading activity for today. So these are my views here on the US All Spot for today. Very simple setup we can easily use to guide our trading activity. And if you have any questions whatsoever as regards to this current setup, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions before we move on to the next instrument. You can as well use that time, of course, to mark out those levels on your charts, as you will be needing them as a reference purpose point to guide trading activities for today. All right. So, in the absence of no questions, I want to assume that we're all on the same page. But I see some comments here from 8603. Good morning to you. Vincent, good morning to you. And Jack Rasentes, hi, thank you very much. Nest 57, I also see your comment. So, in the absence of no questions, I want to assume that we are on the same page. So, we shall be moving on to the next instrument on our watch list. So the next instrument on our watch list is, of course, the US Tech 100, and another phenomenal week we have experienced on this option so far this week, as we bought and also we had some selling position as well, all of which end up in significant amassing of pips on this one. So let's run through how the week indeed started for us on the US Tech 100 and what incited the ideas that we were going to be buying or selling at every point in time. So at the beginning of the week, we indeed acknowledge that price action has been bullish since the beginning of this month. And in fact, we had a couple of lines here to emphasize the strength of the buyers in this market. And after we connected the series of higher highs and of course the higher lows, we had this beautiful ascending channel which has been supporting this momentum since the beginning of the month. In addition to this is an ascending trend line which slices this ascending channel into equal halves, as you can see here. And of course, this was one of the parameters we said we were going to be using to guide our trading activity for this week. Now, zooming into the nature of price action prior to the beginning of this week's trading session, this was what we were able to spot here. So the first thing we observed was this beautiful key level at the 15,550, which of course we agreed at the beginning of the week we will be using as our yardstick to guide trading activity for the week. And you know how we do it in this community with our key levels. As long as price action remains above the key level, we have no other choice than to look out for patterns and structures that will support the idea of buying. And if you look at what happened during the first half of the week, you will see that price action spent most of the time above our key level. Now, in addition to the key level, we spotted how price action was confined within a range during the early hours of the week between the 15,600 and of course the 15,530. So we had a flat channel to work with at the beginning of the week. And one of the things we said here is that we are going to be looking forward to a breakout or breakdown of this range to give us an opportunity to either buy or sell. And with our orders placed at both ends, we had our buy stop order triggered above the 15,600 level, which happened to be the resistance line initially at the beginning of the week. And since then, we have been buying the US All Spot. And remember, on Tuesday, we also spotted another range which also welcoming more trading opportunities as we continue to maximize the trend continuation to the upside. Though we had a sell position initially, but we were taken out in a worst case scenario of break even. Of course, if you had moved your stop loss accordingly, like we've always preached in this community, you would have been taken out with a modest size of profit or at a worst case scenario break even there before the buy stop order above the 15,725 level was broken to the upside. Now on Wednesday again, we also spotted another range. In fact, the market was very kind to us this week as it kept us giving us beautiful signals to guide our trading activity. So we had another range here on Wednesday, which we said we are also going to be using to guide our moves, We were waiting for either a breakout or breakdown of that range to give us an opportunity to either buy or sell. So we had a buy position triggered initially during the New York session on Wednesday, which never lasted long. As you will see, price moved about 50 pips before the bearish momentum began, and if you had moved your stop loss accordingly, you will definitely have been taken out at the worst case scenario of break even. And then price went on to go down to break down the support line of that range, retest of structure to incite the strong bearish move to the downside. And since Wednesday, we have continued to sell the US Tech 100. Now, yesterday's trading session, we also identified two structures which we said we are going to be using to guide our trading activities going forward. Remember, we identified the descending trend line, of course, which we said if price action continues to trade below those trend lines, we will feel comfortable in our sell position, while we also look out for more opportunities to maximize that move to the downside. Then remember, besides that trend line, we also identified a range where price action was initially caught within prior to our live session yesterday, giving us another flat channel to work with for the week, for yesterday's trading session. Now, with our buy stop orders placed at the resistance level above that area, that never got triggered, as we saw our sell stop order below the 15,700 was triggered to welcome more selling opportunities in this market, hereby making us to maximize the potential of the bearish move. And I told us all yesterday that if price action continues to drop to the downside, remember that we had the support line of that ascending trend line here, that depending on what happens along this ascending trend line will determine what our next line of action will be. And that if price action finds buy pressure above the ascending trend line, we will definitely be looking forward to adding a buy position. But if price action breaks down the ascending trend line, we shall be looking out for more selling opportunities. And if you had followed this instruction accordingly, you will definitely add welcome more selling position to join that bearish move to the downside. So it was quite an interesting and profitable journey for us on the US Tech 100 so far this week. So well done to everyone who has been part of this profitable journey. So by now, we must have hit our TP target, but for those who still have a sell position running at this particular point in time, you definitely want to be moving your stop losses to secure your positions. Remember, today is the last trading day of the week, and it is always peculiar that on days like this, key players who are taking advantage of a very strong impulsive move will want to be doing some profit-taking activities, which of course would reflect on the chart as price action moving in the opposite direction of the prior leading price action. So with this case scenario here, it is quite reasonable that we move all stop losses to secure this current position while we wait out and see how price action will be playing out going forward. Now, before going into what to look out for today, I have a level here which I'm going to be using as a parameter to guide our trading activity for today, and that is the 15,600 level. Now remember, at the beginning of this week, this level was our resistance point, remember, of this particular range that we identified here during the early hours of the week. So with this range right now, you remember it was what we were using to guide our bullish momentum during the first half of the week. So we saw the breakout of structure here. Price came back to retest structure to push price for another wave of bullish momentum. And look at what happened here yesterday. We saw that beautiful confluence between the 15,600 and that ascending trend line, which of course is the support line of the ascending channel, broken to the downside. And from a technical standpoint, whenever price action breaks down such a level, we expect that price is likely going to come back and probably retest that structure to incite another wave of bearish momentum. So now our level for today is to see how price action will be reacting to this 15,600 if it will get that far before another decision is made. Now, in addition to this is our trend lines. Remember, we had this trend line identified on Wednesday, which we were using to guide this bearish momentum to the downside. And one interesting thing about the trend line is that it also shares a confluence, or is close to that area at the 15,600. So let's see if price action will get that far, probably into this area. And if we begin to see some reversal patterns on our lower time frame, like double top structures, head and shoulder, or rising wedge, whichever reversal pattern that comes in, then we are going to be in for another opportunity to join another wave to the downside. So that is how we are going to be looking out for selling opportunities in this particular market. But if price action continues to the upside in such a way that it breaks out both the 15,600 level and of course the descending trend line, then we might likely be looking out for buying opportunities. But remember, we are not going to be getting too excited, as we will still need some confirmations before we can join that bullish move. And one of the things we are going to be doing is to scale down into the lower time frame first of all, and see if the market will do a retest of the 15,600, and continued by pressure above this level definitely will be welcoming an opportunity to join an uptrend continuation. So this is how we are going to be looking out for buying opportunity. Now, in this case scenario, as long as price remains below the 15,600, we have no business buying the US Tech 100. So let's see how the market will play out around this area. Then one more thing I would like us to do is to acknowledge the higher lows that we have been noticing here. So let me just draw this line here so that we can of course use it to guide our trading activity for today. So we have an ascending trend line here. So price has been respecting this move. I'm of the opinion that this is a retracement of the impulsive move we witnessed yesterday, and how far it will go depends on how price reacts to the zone before another wave of bearish momentum happens. Now, I would like to extend this range further. This is the range where we were at the beginning of the week. Remember, this is where we started the week at, when price was caught within that range, and right now price appears to be back within that range. We might likely see a consolidation phase before another trading opportunity comes in. So if it happens, we falls within that range. Remember how we do it when price action falls into a range. We want to remain patient, waiting for either a breakout of the range to happen to give us an opportunity to buy, or we look out for the breakdown of the range, which of course shares a confluence with our trend line we just identified now, to incite a sell-off. So let's keep this in mind. Mark these levels out on your chart, as you will be needing them as a reference point to guide your trading activities for today. So if you have any questions regarding the current setup I just shed light on, feel free to let me know in the comment section. So in that regard, I will be taking the next 10 to 15 seconds to see if there are any questions before we move on to the next instrument. And you can as well take that time out to mark out those levels on your chart, as you will definitely be needing them as a reference point to guide your trading activities for today. All right, so in the absence of no questions, I want to assume that we're on the same page here. I see your comment, Genry, Koroy, and Jack Rasentis. Well done to you guys. I see you, and happy Friday to you guys. All right, so in the absence of no questions, we shall be moving on to the next instrument on our watch list. So the next instrument on our watch list for today is the GBP USD. The cable market has been quite under pressure since the beginning of the week, and the economic data from the United Kingdom during the first half of the week wasn't helping matters to meant to make the pound sterling to float in this market, as we saw our price action continued to find lower lows and lower highs, making this instrument one of our most profitable trade for the week. So since the beginning of the week, we have been selling the GBP USD, and in fact I would like us to have a quick review of what really happened at the beginning of the week that made us to consider selling this instrument. Now, at the beginning of the week, we had a couple of parameters that was guiding our trading activity. Now, one of them, which is the most important one, is the key level at the 1.3100 level. And looking at the structure here, we saw how at the beginning of the week, we acknowledged that we are going to be using this level to guide our trading activity. And you know how we do it whenever we identify such key levels. As long as price remains below the key level, we definitely want to be looking out for patterns and structures that will support the idea of selling. Now, if you look at this level here, you will see that most of the part of this week, price action had remained below that level, further emphasizing the strength of the sellers at this particular point in time. Now, in addition to that key level was another trend line we spotted during the early hours of the week after connecting the series of lower highs. And you remember, we agreed here that we are going to be using this trend line to guide our trading activity for this week. And one thing we said here is that if price remains below the trend line, we look out for selling opportunities, and if price breaks out of the trend line, we definitely want to be looking out for buying opportunities. And now to top it all up, we had a range which was emphasized during the early hours of the week. As you will see, a price action was caught within that key level, and of course the 1.30820 level to give us an insight into the level of indecision in this particular market. And you know how we do it in this community. When price action falls into this kind of range, we want to remain patient, waiting for either a breakout of the range to happen to give us an opportunity to buy, or the breakdown of the range to happen to give us an opportunity to sell. And remember, I told you I took a buy position above the 1.3100 level, which unfortunately ended in a loss for me as price action dropped to the downside, taking me out of that position in a loss, and went on to trigger the sell stop order right below the support line, and price actually moved about, I think, 30 pips thereabouts before that bullish momentum began. And right here on Tuesday, we identified new setups as we were flowing with the market, as the market was gradually evolving and changing along the line. So we identified an ascending trend line here on Tuesday, which we agreed that we are going to be using to guide our momentum. And we said here that if price remains above the trend line, we feel comfortable in a buy position. And remember, we had the breakout of this descending trend line. Remember that descending trend line here, which was a beautiful sign that we might likely be going bullish. So we saw the breakout of structure. Price came back to retest the structure a couple of times to incite that bullish move, which we of course were part of it before the bearish momentum happened. And you know how we do it. We moved our stop losses when price action moved significantly well in our favor, but unfortunately for the buyers, sellers came in, taking us out of that position. And remember that the trend line was actually our yardstick, and we saw how price broke down that structure. In fact, if you had missed out on the breakdown, the market came back a couple of times on the 1 hour time frame to retest that structure to give us a confirmation of selling this instrument. And since that moment right here on Tuesday's New York session, we have been selling this instrument. We also added one more position around the 1.30700 area here, so we had two positions running as we guided that momentum all the way to the downside, hitting our TP target at the 1.294. So it was a tremendously profitable week for us on the GBP USD. And during our live session yesterday, we identified new setups around here, and we acknowledged that price action was caught within that 1.296 and the 1.2885, which further emphasized the indecision at that point. And of course, we always want to be waiting for a signal in the form of a breakout or breakdown of that range. And one of the things I mentioned here yesterday is that this range here could either transition into a reversal pattern, probably in the form of a double bottom structure such as this, to incite another momentum to the upside, or probably break down that support line here to incite a trend continuation to the downside. And in addition to that pattern, we had our trend line figured out, as you will see here, after connecting the series of lower highs, which we said we are going to be using to guide our trading activities going forward. So with the situation we had there, as price remained below the trend line, we took advantage of this bearish move yesterday, rode the move all the way to the downside, and added more position to it at the breakdown of the 1.28900 level to give us an opportunity to maximize that move. And for those who are part of that positions, well done to you for being on standby, as you would have been taken out of that position by now with a reasonable size of profit. Now, well done to everyone who has been part of this profitable journey. So while I was trying to conduct a comprehensive price action based technical analysis this morning to decipher what our next line of action is likely going to be during both the London and the New York session, I was able to come up with a simple setup that I think we can use to guide our trading activity. Now, one of the things I noticed here is as soon as price got into that range, into this level at the 1.284, we begin to see some buy pressure resume around that area, and in fact this buy pressure led into the breakout of that descending trend line we identified earlier. And for the fact that price action broke out of the trend line, it could be a clear sign that we might likely be seeing a reversal pattern. And considering the fact that today is the last trading day of the week, which always comes up with profit-taking activity, I was of the opinion that we are likely going to be seeing price climb up to the upside. That is, key players who had sold the pounds to buy the US dollar will probably want to be doing some profit taking here by buying the GBP USD now at a very cheap price, which would at the end of the day push price to the upside. But something interesting is going on here. Now, if we look at this whole structure from a technical standpoint, price action breaking out of the trend line here, you know, from a technical standpoint, whenever we have price action breakout of a key structure such as this one, there are chances that price will still come back and retest the trend line to incite another wave of bullish momentum. Now, with the situation that is going on right now, though I have a sell position running right now, which I took advantage of at the breakdown of the 1.287, and currently running with about how many pips now? About 20 pips thereabout. So if you are part of this one, I will be suggesting that you move all stop losses right now to break even zone and let's see how price action will react to that temporary demand zone I was able to spot around this area. And one interesting thing about this temporary demand zone, is the fact that it also shares a confluence with that descending trend line. So let's see if the technical expectations here will happen, that is the breakout of the trend line, price coming back to retest. You can see the sharp rejection of that demand zone and the trend line there happened like 3 hours ago, giving me a sign that buyers might likely be coming in to make this area an accumulation phase to incite a reversal move. So I'm very, very conscious around this area. So move your stop loss if you have a sell position running right now. Secure this current position while we wait and see how the market is going to be reacting to the zone. So if the buy pressure around this area persists and continues to push to the upside, then we are likely going to be seeing a reversal pattern in the form of what may look like a double bottom structure such as this, where the neckline of the double bottom structure will be around the 1.28950 level. So you know how we do it when we have double bottom structures. We expect a breakout of that neckline to confirm that truly this is a reversal move to join that uptrend continuation. So that is how we are going to be looking out for buying opportunity here. We need a confirmation for that to happen. However, if price action continues to drop to the downside, and in fact it takes out all the buy positions within the zone here, then we are going to be good for another opportunity to sell the GBP USD. So in fact, I would need a confirmations to happen, as a breakdown could turn out to be a false breakdown because that's a demand zone right there. So it might want to shake out a lot of sellers in the market before the bullish momentum happens. So in that regard, if we do have a breakdown of that demand zone, we are not going to be selling immediately, but wait for a confirmations to happen. So once the breakdown happens, all you need to do, scale down to your lower time frame, where you want to be looking out for patterns and structures that support the idea that buyers are finding it difficult to climb back above that demand zone. And of course, this would reflect on the chart at something like retest of structures a couple of times, continued selling pressure. Then we want to be adding more sell position to our existing trade. That is for those who already have a position running, and if you are new to this one, then we could have a fresh new sell position in this market. So we have a very simple setup we are going to be using to guide our trading activity for today. So our center of focus basically is between the 1.2895 and that demand zone here, where a breakout of the 1.2895 will be the breakout of the neckline to join a reversal move to the upside. And if price action goes on to break down and retest the temporary demand zone at the 1.284, definitely we want to be getting ready to sell the GBP USD. So let's keep this in mind. Mark these levels out on your chart, as you will be needing them as a reference point to guide your trading activity for today. So let's see how this will play out. And if you have any questions whatsoever as regards to what I just explained here, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to read through the comment section, and we'll move on to the last pair for today. In fact, I'm already short of time, so we shall be running through the last pair in a moment after waiting for inquiries to happen. All right, so in the absence of no questions, I want to assume that we're on the same page here, and I hope you've marked out these levels on your chart and to use them as a reference point to guide your trading activity for today. So we shall be moving right into the next instrument for today. So the next instrument for today is my favorite, and that is the XAU which has been a very profitable trade for us since the beginning of the week. Now remember, at the beginning of the week we were actually buying the XAU. Let me show you the chart we shared during the beginning of the week. So let's run through how price action started the week, as you will see here. So at the beginning of the week we had a beautiful descending channel which was supposed to support the idea of selling this commodity for the week, and we had it right there. Then coupled with the descending trend lines, we had a range where price action was caught within, and in fact we saw some selling attempts at some point before that descending trend line was finally broken to the upside to trigger our first buy position for the week. And since that moment we have been buying as we capitalize on this move, adding more positions to our existing trade. As you will see here, price action move. Let me see how many pips that was from the first position. It was about 300 pips. That was just only one, and remember we had a minimum of 3 positions running on this one, so it was quite a very profitable first half of the week for us on the XAU. Now moving right into the second half of the week, where I had a new chart for that setup, we were able to spot new patterns on this chart. Hold on a second, I'm trying to load up my chart right here. What is happening? I was supposed to see my chart patterns. Give me a moment, please. Let me sort these out. And hold on a second, please. I'm trying to check what's happening here. All right, so this is what happened during the second half of the week. I finally got it. So right here, on was it on Wednesday? Yes, on Wednesday we had an ascending trend line, of course, which was supposed to be Wednesday stroke Thursday, I think. So we had an ascending trend line. We were supposed to be guiding our trading activities. So as long as price remains above the ascending trend line, we of course want to be looking out for patterns and structures that will support the idea of buying. And not only if price action breaks down the trend line can we be considering selling. And during our live session yesterday, I told us all how important the 1,979 level is for us for yesterday's trading session, where I was saying that if price breaks down that structure, we definitely want to be selling this commodity. And in fact, if you had missed out on the breakdown initially, the market was so kind to us, it came back again to retest the structure to incite that strong bearish move to the downside. And in the last 24 hours we have been selling this commodity, even maximizing on the potential of this move by riding. We have the breakdown of the 1,975, we have the breakdown of the $1,972.30 level, and of course recently we had the breakdown of the $1,967.50 level to maximize the potential of this bearish move. And in fact, in the last 24 hours, if you still have your first position running, it's running with about 155 pips. The second position here is running with about 120 pips, while the third position right here is running with about 90 pips in profit, and the fourth position here is running with about 40 pips in profit. So it has been quite a profitable first half of the week, and followed up with another profitable second half of the week for us in this community. So well done to everyone who has been part of this profitable journey. Now, moving into the last trading day of the week, being Friday, and considering that majority will probably want to be doing some profit-taking activities in this particular instrument. And with the situation we have here, how do we intend to manage our position going forward? Well, we're trying to analyze and decipher what the next line of action will be here. I was able to connect a series of lower highs here. At least since Wednesday, we have seen our price action has been finding lower highs, so we connected that to have this descending trend line that you can see on your screen. So this descending trend line here is going to be what we are going to be using to guide our trading activity for today's trading session. And as long as price action remains below the descending trend line, we shall feel comfortable selling the XAU-USD. And the only condition that will make us want to buy the XAU-USD today is for this trend line to be broken and breached to the upside. Now, if a breakout of the trend line happens, then we shall start considering buying. Now, remember, we are not going to be getting too excited when the breakout of the trend line happens, as we will need confirmations to happen. Now, look at what we have here. The $1,967.50 level shares a beautiful confluence with that descending trend line. So if a breakout of both the structure happens, we scale down to our lower time frame to look out for confirmation, which would reflect on the chart as a retest of that structure to incite another wave of bullish momentum. And if this happens and price action continues to find higher highs, remember that we have very important levels that we can use to maximize the potential of this bullish move. So let's see how price action will play out in the next 24 hours in that regard. Now, secondly, we want to look at the potential sellers have. Of course, it has been very bearish in the last three days now. And if price action continues to remain below this descending trend line, we will have no other choice than to continue to look out for selling opportunities. Now, with a sell position running at this point, I hope you have moved your stop losses anywhere above the $1,967.50 level. Seems most appropriate to secure this sell position. Now, if price action goes on to break down the $1,961.50 level, then we definitely want to be looking out for more opportunities to sell. So this is how we are going to be managing our position on the XAU-USD today. So our center of focus for today's trading activity from this moment on is between the $1,967.50 level and of course the $1,961.50 area, where depending on how price action reacts to the zone will determine how today's session is going to close. Are we going to be having a breakout of the $1,967.50, or are we going to be having a breakdown of the $1,961.50 area? So time will tell. Let's position ourselves in such a way that we can catch this potential opportunity. And I think it's on this note I want to call it a day here, but I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever as regards to what we discussed so far today. And if there are any, please let me know in the comment section while I round off and also give you that time to mark out these levels on your chart, as you will be needing them to guide your trading activities for today. I see your comment, Aki88. How are you doing today? Glad to have you around. I accept your flowers with all humility and gratefulness. Thank you very much. I wish you a wonderful weekend, Aki88. And I see you, 3632. Good morning to you. Thank you for checking in on us. KCar971. I see your comments. I am very sure the support team are aware of your suggestions. We really appreciate that, and they will do something about that. Thank you for that positive feedback, and the team will work on that one. So it has been a wonderful moment out here today, and in fact, it has been a tremendously abundant week for us all in this community, as we were able to monitor successfully for financial assets for this week, which are the USD JPY, the JPP USD, the XAU USD, the US All Sports, and of course the US Tech 100, which of course we were able to scoop in a significant amount of profit so far for the week. So congratulations to everyone who has been part of this profitable journey, and I hope that we can replicate this scenario again next week. And for those who are joining us for the first time, I hope you are able to gain one or two things from what we discussed here today. And as usual, it might look a little bit overwhelming, but trust me, with time you get to understand how this works, as our style of trading here is very, very simple, using just key levels, trend lines, and of course chart patterns to identify and manage our existing positions. So I hope that you be part of our subsequent sessions, as the more time you spend with us, you will be able to eventually use the information you gather here to make your own independent decisions on your account. So on this note, I want to wish you all best of luck during the New York session today, and remember that today is a very key important day where profit taking activities could be the order of the day. So you definitely want to be locking in and securing your current positions as we move right into the later part of the day. So do have a wonderful evening, everyone, and I wish you a splendid and blissful weekend, as I look forward to seeing you again next week, same time, 10 a.m. UTC, 11 a.m. West African time, as we come here again to take a fresh new perspective at the financial market. Do have a wonderful evening, everyone. Bye bye.